One of my students just turned under $2,000 and do over $100,000 in a single week. And no, he didn't get lucky on a single options play. He was trading futures on a normal account and risked only $500 per trade. And before you come at me and say that it was impossible and he got lucky and I'm just out here spitting crazy claims, I do first need to say that this is not realistic. And I don't want you to leave this video thinking you'll be able to do the exact same. But there was a specific strategy that he used, which I'm going to share in this video, that allows you to turn a small amount of money into a large one relatively fast. And as you'll see later in the video, it's actually pretty genius. Now, I'm about to share with you the exact strategy he used to get this crazy return, but first, I need to give you a little warning statement. And just to give you guys some context, if you don't know who I am, my name is Jordan, and I've been trading for about 6 years now. I've mentored over 300 students over the past year, and on average, our students are doing 63.8% win rate and about 1.42 average risk reward. So what I'm about to share with you guys is not predictive of what a normal student actually looks like. But his strategy consists of two different parts. And in this video, I'm going to break down both of them so you can walk away with a clear plan on the same strategy he used to turn 2K into over $100,000. Now, the first part of his strategy is the actual execution side, being how many contracts did he get in and how was he able to scale this account so quickly with such a small amount of risk. And the other part of the strategy, which I'll share later in the video, is more about the technical analysis side and the why and how that he decided to get into these trades. But before I share with you the execution side of the strategy, we first need to cover why he even decided to grow this account in the first place. You see, this whole thing started when he came across my 1% a day video challenge, where I had a $20,000 account and the goal was to grow it 1% a day for an entire month. All I did each day was get to 1% a day and then I'd stop trading. And I was successful with it. I had about $4,000 in profit at the end of the month, which is about 20% of a $20,000 account. Now, this student saw that video and thought he could do the same thing, but actually tweaked it in a little bit that completely changed everything. You see, instead of stopping at 1%, he realized, what if I could go more? Why not go 2% or 3%? Or what if I get a 5% opportunity? Why would I take profit just at 1%? Why would I take profit so early when there's an opportunity for price to continue moving higher? And so the big change he did was, instead of taking profit at 1%, he would add to his position and add at his take profit. And this is completely backwards from how people normally trade. You see, typically when you're trading, you want to be able to get in, have a hard stop, and have a hard target of where you want to get out for profit. That's how I like to trade, and that's also how most traders trade as well. But what this one student did was understand the concept of averages. And this is where the execution style of his strategy is so key and so important to understand. Let's say, for example, you get into a position with one contract at $3,000. Now, as price goes up to 3,010, you end up buying another contract. Your average goes down to 3,005 with two different contracts. And then let's say price keeps going up to 3,020 and then you buy two more contracts, then your average goes up to 3,015 with four contracts. So as price starts to move up and you start to buy more as price goes up, your average continues to goes up, which means your break even also goes up as well. So the way he was able to control his risk was by always having a stop loss right above break even. So it didn't matter how much he would add as price moves higher. He could put on 10, 20, 30 different contracts. As long as his stop loss is just above his break even and price continues to push higher, he's still going to have very low risk. And so the way he would trade the strategy is he would start off with one contract and risk $500 on that account. So let's say he's buying ES futures, price comes down, he decides to buy, he risks $500 on that contract. So if price dumps on him, the max he's going to lose is $500. Now, as price starts to go up and he's in his take profit, let's say he's up about $1,000, instead of taking profit, he will add to his position. He will buy another contract or buy two different contracts, moving his stop loss and his break even up at the same time. So at this point, no matter what happens, if price goes down a little bit and pulls back, he's going to get out for a small profit. But if price continues to go higher, he now has more contracts and he's going to make a lot more money. And so as price continues to keep going up and up and up, all he would do is continue to add and add and add, and you would catch these crazy trends where price just goes straight up and you keep on adding, you keep moving your average up, and at some point he would have 20, 30 to 40 contracts, even though he only started with one contract, risking $500 on it. And the crazy part is, as long as you keep moving your stop loss above your break even or above your average price, you're always going to have very small or limited risk. Because again, you're going to be protecting your capital by moving your stop loss above your break even, because your risk is still going to be limited. So if you're able to catch a crazy trend by doing this, you can get in, have a max risk of $500 and keep adding to your position. As price keeps going up, you can eventually get to 10, 15, 20 contracts and then move your stop up to a point where you're, still going to make, let's say, $2,000 or $3,000, even though price pulls back to your break even or your stop loss. And this is exactly what he would do to get these crazy amounts and grow from a $2,000 account to $100,000. It started very slowly, and he would just simply add to his account and catch these crazy trends. And yes, there may have been a little bit of luck involved, the fact that he was able to buy low and sell high using the strategy I'll talk about later in this video. However, there was still the concept of using averages to your advantage and moving your stop up to keep your risk so small, but also catch your crazy gains and let your winners run, which is something that he took advantage of like crazy. And so by simply having a good understanding of risk management and how averages and break even works, what you can do is continue to add to your position as price moves in your favor and have a much higher opportunity of making much bigger gains. Now, what I want to do is dive in the charts and show you guys the exact strategy of how he would actually decide to get in and where to get out using this method, and also how he was able to increase his contract size so he would have his average up and make a lot more money and scale these crazy accounts. Okay, so I'm going to give you guys a quick rundown of the actual strategy he took. I'm going to show you one of the trades that he actually did take that grew one of his accounts like crazy in a second here. But I do want to mention that learning this entire strategy is going to take a little more time than just a simple, 5-minute video that I'm going to show you. So what I've done is leave a link in the description below for you to go ahead and join the Vault. It's my free community. We have a bunch of different courses and classrooms on here. And we do have a supply and demand mastery course, which is what I'm going to cover in this video, where we go over exactly everything you need to know when it comes to supply and demand and the exact strategy that my student used to grow his account. So make sure you go ahead and check that out after the video. But let's go ahead and dive in and show you guys one of the trades that he took that actually grew this account, okay? And so, as I just said, it was based off of supply and demand, okay? And if you know supply and demand, you know essentially that it's based off speed, okay? And if you can look at this chart and you can identify a supply and demand zone, you can make a lot of money, which is exactly what he did, right? And so one of the things he did, I can go ahead and draw out the supply and demand zone that he actually got long on, was right here, okay? So this was actually the zone that he decided to buy on this dip right at market open. Okay, so the market opened right around here. This was when there was news around 8:30 for either CPI or whatever it was. There's news, price came down, price came back up. We started to form an uptrend, and price came back down into this demand zone, where price obviously ended up bottoming at the low of day, ended up rallying like crazy all the way up here. Now, what did he end up actually trading to make this happen? Okay, well, again, if you understand supply and demand, and again, you can do that using the link in the bio or link in the description below. If we go ahead to the 5-minute chart, I can zoom out and show you exactly what I'm talking about. You can see that there's a really solid demand zone here, okay, because price came back down. We had a really strong push higher. And again, fast price action shows aggressive buyers. It shows market buyers, okay? And we leave behind us those orders for price to come back and refill, right? So what I'll do is I'll go back to the 1-minute chart, show you guys exactly what I'm talking about, and show you where he decided to get in and add to his position for this specific trade, okay? So just like this, you can see that we have a nice little tight consolidation area right here, okay? Really tight for like 5-10 minutes. We just kind of consolidate, really nice, and we get a huge spike higher, okay? And we leave this little demand zone right here, right? And so this is our zone that he had drawn, and as price came back down, he would get in with one contract right down here. He'd put his stop loss right below low, and he'd risk about $500 on this trade, okay? That's all he was doing, keeping it really simple. Now, there is a little bit of supply up here. There's a little bit of liquidity up here. And as price came back up to it in literally about like 6 minutes after he got in, instead of taking profit, which he could have made, a few thousand or like $1,000 on this, he decided to add, okay? And so what he did is he added, and his average ended up moving a lot higher, okay? So if you remember, he got in right here at the low. So his, entry is right around 5342, we'll call it, okay? Then he adds another contract all the way up here at 5355, okay? And then what he does is average ends up moving higher, okay? So now his average or break even is going to be right around here in the middle. We'll just call it 5347.5, okay? So right around there, okay? So now he's essentially in at this point in time with two contracts at 5347.5, okay? And so what he does is he moves his stop loss to break even, okay? So now this is his entry. He moves a stop loss actually above break even. He wants to lock in a little bit of profit, right? So he moves it a little bit higher, okay? So no matter what happens, if price pulls back down to this 5348, 5349, he's still going to make a few $100s. That is the worst case scenario for the current outcome of this trade, okay? So it started that his max risk was about $500, and now his max risk is that he's going to make $200 or $300, okay? Really incredible stuff. So he does that. What happens? Price continues to push up, and price continues to push up and up and up, and he keeps adding. All throughout this consolidation, he keeps adding. He keeps adding and adding and adding all throughout here. His moving average, his break even starts to move up and up and up, keeps going up. And again, he keeps adding. Break even keeps going up and up. And at this point, he has like 20 to 30 contracts on. Okay, he's like 20, 30 contracts on. Again, his stop loss is still just above his break even. So his price is going up, his break even's going up. he's still going to lock in a few $1,000s, okay, even if price pulls back. And what does price do? It just starts to rip. It just starts to rip straight up. He's adding that and price goes a lot higher. Again, same exact thing. He moves it up and up and up, and eventually he gets stopped out, and he makes like $20,000 to $30,000 on this trade. Okay. And again, it all started by risking $500, and by adding when price moves higher and by understanding averages and the law of how that works. As you keep going up, you can move your break even up. And at this point, he had like 20, 30 contracts, right? His break even was, or his stop loss was still way above his break even. So no matter what happened, he's going to make a nice $20,000 to $30,000 profit simply doing this. And really all it took was just a few of these trades to grow it from $2,000 to $100,000. Okay. Because just doing a few of these, as long as you keep scaling up really crazy and catch these moves like this, you can make a lot of money. Now, obviously, it's not going to be easy, right? You have to make sure that you're actually catching the low of day and you're catching this crazy trend, and there aren't a lot of strong pullbacks throughout this entire move. But by being able to recognize the law of averages and being smart with where you're entering and where you're exiting and moving your stop loss up and keeping your risk really small, you can get these crazy risk rewards and grow this account like crazy. And that's exactly what he did. Now, again, I want you to leave this video with the understanding that this is very unlikely to happen. The fact that you are going to think you can turn $2,000 into $100,000 in a week, just like my other student did, is very unrealistic. And I'm not saying that you're going to be able to do that, because it is very unrealistic. But what I am saying is, if you have a strategy that works and you have a proper way to learn risk management and use those in combination together, there is a good chance that you can make a lot of money relatively quickly. That is the power of trading. That's also why it's very dangerous and very risky. A lot of traders lose a lot of money very quickly. So if you're able to go ahead and stick with proper risk management and use a strategy that actually works, you can make a lot of money with trading. And if you guys do want to have a better understanding of price action and supply and demand and all the strategies that myself and my students trade, what I'll do is go ahead and leave a link in the description for you to go ahead and join the Vault. It's my free community. We have like 7 different courses in there going over absolutely everything you need to know from beginner to advanced. So you can go ahead and join that and learn the same systems and setups that other 6-figure traders like myself use to trade full time. And if you guys are interested in becoming a student of one of mine, where we teach you how to become consistently profitable in just 8 weeks without relying on alerts and without trading more than an hour a day, I'm going to leave a link in the description as well, so you can book a call with one of my coaches to see if you'd be a good fit for my mentoring. But with that being said, hope you guys did enjoy this video. Make sure to leave a like, subscribe, comment down below other videos you want me to make, any other questions you have. I'll see you guys in the next video.